So again, hi everybody. My name is Ronald. I'm the co-founder of About Fraud, and I'm the host of our webinar today. Before we go into all the details, I have one housekeeping rule. Please ask questions. So on the right-hand side, you should be able to see a box where we can already see some messages from different people saying hello. That is the right place to ask your questions. We're trying to keep this as interactive as possible, like always. And we're also trying to incorporate your questions straight away. Otherwise, we will take them at the end of the session. So please feel free to post your questions into the box, and we try our best to give you insights. Perfect. Then today we talk about instant payments. I think it's a big topic, and a lot of people are really curious to learn more, especially how that relates to fraud and how can we stop the fraud at instant payments. Today we have actually 4 of us, but right now you can only see 3 of us. We hope that Hall is joining in a second. But in the meantime, we already can do the introduction of Ian and Keith, who are speaking today. Maybe Keith, you can start first with doing an intro. Who are you? What are you doing? And then everybody knows who you are.
Cool. Thanks, Ron. My name is Keith Gray. I work for the Clearinghouse. We run the RTP network, among others. We'll talk more about that as we go forward. And thank you for joining us today. And thanks for Ron and the team here for including me on the podcast.
You are welcome. Thank you for joining. Ian, your turn.
Yeah. Hey, thanks, Ronald. So, Keith, I'm excited to be on this session with you. I've been wanting to connect with somebody at the Clearinghouse for a while, and so I loved this opportunity to spend a little time and hear from everything you guys have going on. A lot of important things are ahead of us this year and next in this changing landscape of payments. My name's Ian Mitchell. I'm a 25-year fraud fighter. I was the head of fraud at a couple banks across 24 countries, got tired of corporate America, grew out the beard, retired early, not because I could afford it, just because I'd wanted to. And then I met somebody who had been fighting human trafficking for 3 decades. My mind was blown. And now I'm back in it. So I started a nonprofit called the Knoble that works with financial crime fighters all around the world, both AML, cyber, fraud, all working together to fight what we call human crime, which scams is one of them. And I've also started a company called Omega with a business partner, Ben Wallach, that basically brings fraud consulting services. And we spent a lot of time talking about this topic on both of my worlds. So thanks, Ronald, for letting me be here and thrilled to be in this conversation.
And Ian, you and I are fellow Tennesseans as well.
That's right. We should have just done this halfway between Nashville and Chattanooga.
Exactly. Monteagle. We could have met on Monteagle. Yeah.
Thanks for being here today. And the audience can see we have very knowledgeable speakers around who can really talk about this topic and give him perspective. And on the right-hand side, you can see a couple of topics which we are trying to cover today. But again, it's important to start what's actually instant payment, real-time payment, faster payments. I think there are a lot of words used in slightly different occasions or in different regions of the world. But Keith will start giving us an intro from his point of view, and then we're going into more details. And again, please feel free to ask questions anytime.
Great. Thanks, Ron. And it's interesting to me anyway, as a bit of a payments geek. In the world of payments, not a lot new happened until about 5 years ago. And then all of a sudden, it seemed like everything happened at once, right? And like Ron was alluding to, there's a lot of terms around it: faster payments, instant payments, real-time payments, RTP, Zelle, Venmo. Yeah, I mean, all of a sudden, we did a lot of these things at once. Not a lot had changed in the payments world for 40 years, frankly, since the Clearinghouse launched our ACH network many years ago. Then all of a sudden we did a lot of things at once. And I think that created a lot of confusion in the industry. Hey, Hal, welcome and thanks for joining us. So it created a lot of, I think, confusion in the marketplace as to what exactly it is we're talking about. The Clearinghouse, many of you in the industry anyway, typically have heard of the company but there's still a lot of confusion around what exactly the company does. Where the way to look at it, I would say, is we provide the infrastructure in the payments world that banks and credit unions typically run on. We run a check imaging network, we run a wire network, we run an ACH network, and we launched the RTP network 5 years ago. The clearinghouse is owned by the banking community. We are owned by 25 banks, and we have hundreds of banks that use our various networks. On the other side of the clearinghouse would be the Federal Reserve, who oftentimes provide related or similar services. We run an ACH network. They run an ACH network, as an example. We launched RTP 5 years ago. They're getting ready to, next year sometime, launch a similar offering called FedNet. One thing I think I would start out with is just kind of defining what exactly are the traits or what makes a real-time payment unique. And it's often helpful to compare it to what we're used to. Typically, in our payments world, we're very used to delayed availability or not having visibility into when a payment has been made. Has it been made? Is it going to be made? Is it coming out of my account? Has it already come out of my account? And frankly, the debit nature of many of our existing rails leads to that. RTP is a credit push-based network. I have to send you the payment. The sender originates, the receiver confirms, and the funds are immediately available, literally within seconds. There is no delayed availability. Also, in existing networks, there's a reversal capability. With RTP, it is payment certain. So for many use cases that are currently running on the network, in addition to the real-time nature of the payment, which is obviously a huge value, and the visibility of that payment on both sides of the transaction is also of great value, but the payment certainty of it, you're not, if you're a merchant, you're not worried about those funds getting pulled back, as an example. The payment is cleared and settled immediately, and both sides of the transaction have complete visibility of it, are aware of that. And again, I mentioned the debits. No, RTP is a credit push network. No direct debits allowed, and that really helps as what we're going to talk to here as we move forward in the as far as fraud goes, because it is a credit push network. Not that there's no risk of fraud; it just moves the risk of fraud to the front end of the transaction, and we'll talk more about that as we move forward. Again, we launched 5 years ago, and the network has been growing very quickly since then. As far as the payments volume, you can see from the chart on the left up and to the right in this line of work is always really good. We'll do about 50 million payments this quarter, worth billions in money movement. That actually is growing by about 20% a quarter. So you can definitely see the hockey stick up and to the right as that continues to escalate. We have about just under 300 banks and credit unions that are on the network. That also escalates almost every day as we add small FIs onto the network. For the most part, all of the large and credit unions are already on the network. That makes up for what we think of as coverage across the account base. So the way we measure RTP is the number of accounts you can reach with a RTP transaction. And that's at about 62% and keeps growing in small increments now as we add, again, once you've added Chase and B of A and many of the other large FIs, it's little steps to get the other 5,000 or 7,000 banks that are not on the network yet. So we continue to work on that. That coverage point still continues to grow, and we definitely see that escalating as well. One thing you have to keep in mind, and that I point out, I guess you don't have to keep in mind, but one thing I like to point out is RTP is you think of it as the plumbing or the infrastructure that supports a host of different use cases. And that use case could be a P2P payment, like with Zelle or Venmo as an example, or a business to consumer, or title companies, merchant funding type applications. Companies like Square use the network to push money out of your Square account into your bank account immediately. Insurance companies are using the network to pay insurance claims immediately. And if you think about when you're dealing with an insurance claim, oftentimes that's an emergency. You need the money as soon as possible. So having a real-time payment capability is obviously of great value in use cases like that. We see a lot of gig economy companies on the network, and it could be companies like Grubhub and a large ride-sharing company using the network to pay their drivers. So you make your delivery and you're paid immediately, and it's actually in your account immediately and cleared and settled immediately. So as you can see, there's just a host of use cases. We keep adding new use cases. One thing we really didn't expect, and frankly, I've been involved with the network since before we had the network, and involved in a lot of the planning. And we really didn't think, as we were thinking about use cases that would be on the network, payroll didn't come up. But especially when the pandemic hit and all of a sudden daily pay became a big thing and earned wage access, obviously RTP was ready for that. So we see a lot of payroll and adjustment payrolls and same day payrolls running on the network as well. And that continues to be one of the fastest growing sectors as well. So I'll stop there. We are obviously very open to questions, as Ron said, and I'll defer to my co-presenters at this point.
I would like to, Hall just left. I just want to give him opportunity also doing an introduction. But once Hall is back, here we are. Maybe Hall, it's a good chance doing also an intro from your side. We already did this before, but please take a minute or two to do a round of introduction from your side.
Hey, sorry about technical difficulties here. Hopefully you guys can hear me now. I want to introduce myself, Hal Granoff. I am with Callsign. I've been with the organization for about 2.5 years, heading up the U.S. market development. Prior to that, spent 13 years at Early Warning Services / Zelle, even started before Zelle was even Zelle or even thought about. So been in the fraud industry for almost 20 years and really looking forward to the conversation. Again, apologize for all the technical difficulties on my end today. Looking forward to this.
Yeah, you're welcome and thanks for joining.
Yeah.
I would like to maybe give it first to Ian, maybe to giving some feedback on what I've seen a lot of slides already. I've seen a lot of data, a lot of different use cases. I think now is really getting different perspective on these topics. Ian.
Yeah, Ronald. So first of all, Hal, thanks for joining. I know it's so frustrating sometimes when there's technical stuff going on. It's great to have you here. Callsign offers a lot of solutions that'll be appropriate for this type of fraud, or at least the frauds we're talking about. So, Keith, as I'm thinking about the clearinghouse, maybe I'll just mention a couple fraud risks that we're seeing with other instant payment, faster payment networks or providers, and maybe we can talk a little bit, if you don't mind, just a couple questions I would have around the clearinghouse, because you guys, as our pre-conversation happened, also you guys spent a lot of time thinking about what type of fraud controls, and just fraud was a big focus area and concern for you guys. And when I typically think of fraud and kind of the faster payment environments, there's lots of, I think for probably most everybody here, you've probably done a lot of reading, research, or have firsthand experience with some of the other networks or providers out there. When I think about just the fraud risks in general, I know I'm going to miss them, but if I just think about the big four, you're going to have an account takeover risk, meaning legitimate customer is tricked or duped into either, well, that's a scam. So basically it was account takeover risk where basically somebody hacks into their account, initiates instant payment, real-time payments and in their name. The next one would be first-party fraud. And that's been a plague for us in the financial industry through COVID, along with the next one being scams. Scams has been authorized fraud has been a terrible one for us. And then lastly, I think one of the things that's unique to some of the other networks or providers also is just the notion of bad merchants or just bad. And so when you start talking about the Grubhubs and those kind of things, how you do due diligence on those, if you wouldn't mind, Keith, can we focus on the last one real quick and just understand maybe the differences between you and maybe some of the other platforms out there? Because the idea that somebody would come in and be allowed on the network and would be potentially a bad merchant or a bad acceptor or remitter of payments, or whatever the right language would be, that's an area where a lot of institutions will lose a lot of finances or money and start almost getting on the preferred providers or approved provider lists. Or what does that look like, and how is the clearinghouse different? And maybe we can talk about some of the controls that need to be in place for some of the other networks, if you would.
Yeah, and if you think about it, RTP sits behind the application, as I think about it. So there's always a financial institution on both sides of an RTP transaction. There's an originating FI and a receiving FI. Now, many times that transaction may originate from, a company like Venmo or whoever it might be, right? When it hits the RTP network, the money moves immediately. So in any real-time payment network, on the upside with RTP, there is no debit capability. So you're not going, nobody's going to pull money out of your account. There is no capability for that. However, when you're doing a real-time network with a credit push model, it really moves the risk to the front end of the transaction, right? Like you hit the nail on the head when you really have to make sure it's Keith on the other end of that browser, right? Yeah. The other potential is where somebody dupes me into paying them, right? So it's a authorized transaction. I meant to pay it, but somebody tricked me into sending them money for whatever it might be, right? So those two types of fraud are what we really pay attention to with the RTP network. The originators really control that front door to the RTP network. So it's the banks and the credit unions that are really their customers are the ones that are originating the payments on the network. So they've really got to make sure that it is Ian on the other side of the browser, or Ron in front of his mobile device, as an example, right? And protect it that way.
No, it makes perfect sense. So as part of the clearinghouse, the monitoring of the merchant or wherever the purchase is being done at is a little bit different than maybe some of the others, where we have to put very strong intermediary monitoring in place to make sure that, again, the merchant themselves or where the funds are being sent are legitimate. And I think that's maybe a difference that exists because it's relying on the customers of the institutions themselves.
Yeah, absolutely. And it's up if a Chase customer, if Chase determines actually that a transaction they processed on the RTP network was a fraudulent transaction, then it's they have the requirement of reporting to the network, which means reporting to all of the other participants on the network that this is a bad actor. This was a fraudulent transaction. That way we can leverage the network effect very quickly and really reducing any type of fraud with that by sharing that type of information. Again, once it hits the network, the money's going to move. So you have to catch it in advance of that. But when you don't, there's a reporting and reconciliation process that we have in place that where the different institutions can share information, update their prospective fraud tools, and address it very quickly that way.
And so maybe this is over to Hal now, but I think the most explosive outside of that first risk I talked about, the most explosive, I think, risk we experienced with some of the other networks, faster payments, was just account takeover risk. And just and really clearly that's risk that exists in a lot of the digital channels. And maybe Hal, maybe that's a good place for you guys for maybe you to kind of give your perspective about ATO and what you guys have seen.
Yeah, I think it's where we've built a very fast getaway car, right? We're now have to act in real time. So I think the key thing is it the actual person taking over the account, or is it different devices, same person? So we really need to, I'll say, get faster in a real-time manner and being able to catch these things. So while the rails are very fast now, the fraud is happening just as fast. So while you've got your traditional ATO where I get Ian's credentials, right? That's one form of it. And another form is where you have the ability that it could be Ian on a different device. It could be Ian on multiple devices. So we as an industry, while we built this very fast getaway car, we need to be able to have controls in order to look and mitigate that, right? To be able to understand, is this truly me? Is there something else going on? Is it me as a human and my credentials, or is it a different device, a different behavior? So all of those things need to be monitored, right? Now we're going to go back to Keith. You mentioned we have to be able to share this information quickly. And I think we need to make sure that it's more than just our name, our address, our phone number, our account information. It has to go above and beyond that, because that's a component of it, but we have to add more to it because there's a lot of sophisticated ways that the fraudsters are taking advantage of this and make it very clever that it may not even look like a traditional account takeover.
I think from a control perspective, when I think about ATO and even just going into the first party fraud, you have to make sure that you're securing your digital channels, whether it's mobile or online, depending on what channel you allow that movement to be. And so there's device controls. There's, obviously multi-factor authentication that needs to be in place. But then you have to get the transaction monitoring in place and look for out of pattern behavior for the customer. And I think that's largely done. A lot of most institutions have that at this point. We don't do a great job across the industry looking across payment channels. So they may make one payment on I'll just go old school, a check, and they do a debit card transaction, and then they're doing some sort of real-time payment. And we're seeing that where fraudsters are taking money out in multiple channels. I think we've done a disservice in the industry by compartmentalizing our controls at the transaction level and not looking at the customer and taking a page out of our AML counterparts of customer risk scoring. And that really is super important when it comes to both authorized fraud and first party fraud, because you need to understand what a customer behavior looks normal and not. But the last thing I think is critical when I think of just the ways I've seen organizations get beat by both identity theft, first party fraud is even ATO is just doing a basic many-to-one check, looking for common phone numbers, email addresses. Where's the money going? Do you have multiple accounts, your accounts across your customer base, all funding one destination account? And so trying to make sure you're doing that many-to-one check is something that I think is, at least in kind of when it comes to our consulting team, as we go and help our clients. And I've seen this for years in past consulting roles, is doesn't matter how big the organization is, how sophisticated the bank is. It's amazing how hard it is to put in many-to-one controls and find that consistently across products. And where that's not in place, that's usually where there's a problem. And that's a control that doesn't necessarily have to be real time and doesn't take a lot of technology. So that's just a little tidbit of something to make sure in this real-time environment that you basically have that backstop, if you will.
Ian, and what are you seeing in terms of, talking to the banks, and I, speak to a lot of banks as well, is that a lot of the times it's very challenging just to be able to classify, right, authorized versus unauthorized. And it really comes down to when I, the consumer, call into a bank and say, well, this really wasn't me. And then the bank really has a choice to say, do I believe the customer who's been with me for 5 years, 10 years? Or do I really believe that it was a true account takeover, or was it me that actually made that transaction? So I think that's what I'm seeing is a really tough classification on the unauthorized side of it, is being able to. It doesn't actually manifest itself until you get into the claims department and on the call center side.
So yeah, unauthorized, I think we've relied so heavily on the customer disputing the transaction. And so anything that's new, we tend to find, 30, 60, 90 days later and have a slow response time. But I would tell you that's been a traditional fraud problem in most institutions for a while. And so as you close that feedback loop and do your defect analysis, or some call it spilled milk analysis, whatever it is, you try to take that early claim and learn and feedback into your controls as quick as you can. I think that's been a third-party fraud problem, but you mentioned the authorized fraud, aka scams.
Yep.
And also under authorized fraud is first-party fraud because the customer is the fraudster. I want to make sure I differentiate that. But the scams part of authorized fraud, again, where the customer is being duped that this transaction is legitimate, being duped, and they're actually authorizing or initiating the transaction, and they either believe it's a romance scam. There's all kinds of different scams I know we're all aware of. That's something new for us because so many of our controls previously have been around calling telling the customer to verify the transaction, looking at the anomaly activity and not having the appropriate treatment, or really just not putting the right roadblocks in place to convince the customer, other than did you authorize it or verify the transaction, to say, is this really something you want to do and should you be doing? And so it's a different type of interdiction that needs to exist. And I would tell you that we are at the point now, and I know everyone here that's on this call, probably your webinar, probably has hearing a lot around scams. We need to hear more. When the Knoble is a nonprofit we work with across, we have about 2,000 financial crime fighters, almost 450 or just over 450 active financial crime, fraud, AML, cyber professionals working on active projects and working together on roundtables and different projects to fight what we call human crime. Scams are one of those. And the reason I bring this up is we have a scams roundtable that is ongoing. And I have a couple stats from the last scams roundtable that I wanted to share. And this is important. 47% of financial institutions don't track scams or authorized fraud in the form of scams. I think that's critical. So half, and this is our last survey, last roundtable we had, we almost 100 participants in it. They went over an hour because there was so much to talk about. So that's less than half of the organizations actually track scams. And just from my early environments, just when my early days as a fraud fighter at GE, they beat into me when GE was actually a big issuer and a big bank. Can't solve what you don't measure. You have to measure everything. So if we're not able to then make the appropriate expenditures and control changes to stop that type of fraud. The other one was interesting. 80% of the respondents didn't have a mature scams detection process in place, which is telling also. So, I think in general, when it comes to authorized fraud, especially if we're going down the path of real-time payments where, these fraudsters, these scammers are trying to get small amounts of money. They're not always big amounts of money. And that makes it doubly hard, right? They're $50, $25, $100. They're getting small amounts of money. If we don't have detection in place that is scalable, if we don't have programs and we're not tracking the scams, chances are we're missing a whole lot of the abuse that's actually happening. And the last point I'll make is these scams, whether they're romance scams or even commercial scams like business email compromise, they're funding many evils in the world. They're funding human trafficking. They're funding child exploitation and terrorist financing. There's plenty of cases. And the way they're funding them is in the form of mule accounts. And we saw that through COVID. So this authorized fraud problem in the form of scams is a really big problem that we really need to rethink our control environment and our infrastructure related to it.
Yeah. One comment, Ian, you mentioned about does this person really want to do this transaction? And we have seen now some institutions adding friction, adding more pop-ups. You really want to do this transaction. But do you believe this is really solving the issue? Adding this kind of one pop-up to ask someone, yes, you really want to do it, or maybe not?
Yeah, so Hal, I'll let you talk about the interdiction, and maybe some of your customers have seen that. But I would say that the way we solve this is just like every other type of fraud. There's no silver bullet, and so there's a deterrence aspect, there's a prevention aspect, a detection aspect, and a response. And so when we look at this fraud type, if I can say that scams are a type of fraud, we have to do all of those. And that's kind of the problem where I think as fraud fighters, especially the ones that have been around for a while like myself, we have to remind ourselves that we can't train our way out of this. But as fraud, we need to make sure we're doing something. So there's some proactive training we need to do in partnerships with our bank, nonprofits and such. So there's training we need to do proactively. We need to put programs in place to track this, to put deterrence kind of steps in place during the process of experience in newsletters and such. And then we need to do detection. And honestly, there's some of the best fraud fighters in the world that are doing advanced detection on, machine learning on card transactions and mobile transactions. We have to do detection. And then we have to figure out how we're going to remediate when it does happen. And I think all of those components were nascent, as I'm just going to say, as a broader financial institution across all of those. All we've done in the past is try to train our way out of it. And that's not a complete fraud strategy. That doesn't work, but it is an important part of it. So the interdiction is one aspect that I think we're particularly slow on, because all we do now is when they hit our queues, we call the customer and verify or authorize a transaction. The customer always says yes. So we have to change the way we do an introduction. There's some good models in the UK, and maybe how you can talk about those that are just kind of slow down points that just say, I think it's take 5 in the UK. Just hey, take a minute, because they prey on urgency, right? So we have to help the customer think differently, slow down. It's not always going to work, but it is one prong of an overall fraud strategy to protect us against scams.
Yeah, I think I would add in, right? I've seen a lot of education out there, right? And education only goes so far. Whenever you send a payment, it says, "Are you really sure you want to send this to Ronald?" And the first time you see that, it gives you a little bit of pause. But now every time I send a payment, it just becomes routine for me. I'm just going to swipe, yes, I'm no problem. Yes, I mean to do this. And then in the case of the authorized APP fraud, you intend to do that, right? So yes, I'm wanting to send money for that puppy that I saw advertised for $500, right? I want to send the money. So to Ian's point is, we need to be able to detect it first, right? Understand that there is something different here. Every bank has controls on the fact that I've never paid Ian before, right? Or I'm paying him a lot of money and I've never paid him before. Those are easy things to track. But in terms of, is this really something that I want to do? Ian mentioned, right, what the UK is doing in Take 5. Let's put a pause there. It has to be very specific on that intervention. And what I mean by that is it becomes human nature to say, yes, of course I meant to do it. I'm going to keep swiping, no problem. But it's that kind of real-time intervention to say, are you on the phone with someone that's asking you to send money, right? So now all of a sudden you've intervened in the middle of that transaction that says, I wasn't expecting this phone call, or I didn't expect to send this money to Ian today. And do you really want to send that money to him and tie that actual transaction back and not just have that generic message? So you're intervening with a purpose. And then the last part of that is you're preventing it from happening by denying that transaction, right? So there's lots of pieces of data within there beyond just I've sent Ian $50 before, or I've never sent Ian $50 before, right? Those are dollar and those are transactions. Those are things that the banks can see. But what is my pattern, right? Am I a little bit nervous? Was I expecting something to happen? Being able to detect some of those anomalies is key in being able to just slow it down enough. In that, again, going back to that fast car that we built, being able to give someone a pause to say, am I really sure that I want to send this $500 to Ian for this dog because I really saw that picture up there and I really want that dog, right? How do we understand that yes, being able to protect our customers is key, right? They're getting very good. They're getting smaller dollar amounts, as Ian mentioned, and everybody's falling for it. There's no limit to the number of transactions that I see on a daily basis of me asking to log into my bank because there's fraud on it. And I get a text message, I get a phone call from a bank. At some point, I may have made a transaction and they may thread the needle correctly that it could very well be I just made a large dollar transaction, and bought a new phone at Verizon. And they're going to prey on that. We have to be faster in our controls.
Now, Hal, you're making me want to go buy a puppy, by the way.
I've got one I can sell you for $500.
Yeah.
I mean, at the end, detecting fraud and stopping fraud is all about data. And as Ian mentioned before, how you can look at the data for different channels, different use cases, different timeframes. Do you see any kind of improvement or change in the industry that for this kind of payment rail, they added now more data to look at? Or do you think they're still running on the old set of data and really trying to solve this new type of problem?
Yeah, one thing, and I'll point out, and again, as the clearinghouse, we operate multiple disparate payment rails, right? We run a wire network, an ACH network, a real-time payments network. One thing I think we've seen happening from an industry standpoint is, and Ian hit on this, where these have historically been very siloed payment rails. There are different groups you have ACH people within the FI and you have wire people within the FI, right? And one thing I've definitely seen over the past 5-6 years, I would say, is a movement towards at least combining the information relating to those, right? So you can look from it as a, and a fraud is one example, right? But you can take a holistic view across multiple payment rails. And I think that's critical, because if you're a fraudster, a bad guy, you might, real time is the best, right? Because the money's there now, but you might try others as well. And so being able to have that data available that's across all your different payment mechanisms, I think is a critical move to doing a better job on the front end of a fraud transaction. Ian, would you have anything to add to that? That's just my view.
Well, I completely agree. And I think what it's going to need is investment. And the circular conversation we get around investment is attention, is what's the ROI on this? And most fraud professionals, especially North American fraud professionals, the UK's kind of already solved some of this, is we're waiting for liability shifts, which may just be around the corner, by the way. And I think everybody kind of sees all the traffic related to that. So we can wait for liability, and that's a whole conversation that, what are the right ways to drive liability? What are the wrong ways? I mean, we could spend a whole lot of time, but we're talking about technology in this session. And I will tell you, the answer is yes, we need attention. And as fraud fighters, because our customers, these authorized scams are just another type of fraud. And so as fraud fighters, we have, for those that are career fighters, we have, I don't know, the job responsibility for the role we hold and the role we hold in society to protect innocent people from being scammed. And so I do think it deserves some of our attention and deserves some of our innovation for anybody that's on the services and solution side, like our friends at Callsign. We need to get out ahead of this, because this is, I just say, the biggest financial crime problem we have that's leading to human crime. So we do need innovation in this space. We do need organizations thinking about this problem, talking about this problem, because hundreds of millions of billions of dollars are leaving our country in the form of scams and funding evil things. There's a question here from Gordon about biometrics. And I love this question, because I had this question for a long time. And it was actually in conversations with the Callsign folks that I learned a lot, but just about how we need to start using our today controls to start modifying our processes and our technologies to start fighting this. And I think the short answer is yes, biometrics are one piece of a healthy strategy. And maybe I'll touch on other pieces, but Hal, you want to talk biometrics, and maybe I'll come back to other components of what needs to be in place?
Yeah, I'd agree, right? It has to be a layered approach, right? You need a lot of data, right? You have data on the transactions, but on the passive control, so I'll talk about biometrics as a passive control, is being able to understand that you have the right user on the back end of that device. And the way to do that is, right, you think about how you hold the phone, how hard you press on the phone, how fast are you typing, how do you move your mouse. What we have seen is that, well, the majority of payments are happening on a mobile device where you get a lot more information on angle, on pressure, things of that nature. Most of the fraud is actually happening on the web. So it's kind of like, Ian, you mentioned what's old, in terms of check fraud. People are going back to the path of least resistance and looking at those old, I don't call it old, but being on a laptop and making a transfer. You have to be able to look at both the phone on the biometrics, but also on the web too. And when you look there, is how fast are you typing? Is that normal to type your name that slowly, or is it that fast, right? Is it a bot detection? And, is there some other than human intervention going on to realize that, this is not human behavior, or it's not health behavior or Ian's behavior. Those are critical in adding to all the bank data that they all have today.
And I think those are partnered with third-party data sources on intelligence. So what's happening, looking at malware and working with your cybersecurity partners to look at what's happening on the actual devices themselves, because a lot of times they do happen. There's kind of a mixture between scams and ATOs going on, I think is important. And then feeding all of this, not just into your digital footprint, but feeding that into your transaction engine. Spending the time to integrate them is important. There's a good comment here, man, about, it said about, regulators need to drive our change. And I don't disagree with that. I have the utmost respect for our regulators. I'm not one that knocks them at all, although I have been the beneficiary of a lot of regulatory attention in my career, and some not always great. And I've had to comply with laws that are, 10, 15, 20 years past their prime, still looking at address mismatches and such. So I will tell you that just the nature of fraud fighters, and this is my encouragement to all fraud fighters on the phone, unlike our wonderful counterparts in AML and that side of the world that have to do things because of regulation, in the fraud space, it really hasn't been that way for us. Now, we haven't had to wait for regulation to deal with synthetics. We haven't had to wait for regulation to deal with authentication. And even when it was two-factor authentication, when the FFIEC guidance came out, so many fraud fighters had already put that in place at their institutions. Now, largely because of financial implications or losses. But I think that we're going to discover that scams are manifesting and the ROI is there even outside of loss impacts once we kick them out of our organization. And when you start losing young customers, because scams are happening at all ages, and you kick a customer out and report them to one of the credit reporting agencies on deposit, and they can't bank anywhere, we lost a future auto lender, we lost a future mortgage customer, auto customer, credit card customer. And so I think the scale of return on investment needs to be looked a little bit differently. And I have no doubt that our fraud professionals that are very smart, and respond and react without regulation to all kinds of fraud threats that change every 2 weeks, can also work with our credit risk counterparts to build longer-term return on investment kind of models and cycles, which they do all the time when it comes to charge-offs. So I think there's a different way we have to expand as fraud fighters. The lens we go and justify, we can wait for regulation. That is absolutely something that's coming, and it may come sooner than later. But I think as fraud fighters, I just encourage all of you to see how you can actually bring more value to your business or your bank if you're looking at how you can increase customer retention and growth.
And Ian, I think on top of that is that we need to stop treating all of our customers as bad guys, right? And stepping up every single time that something is an anomaly, right? And what we're trying to do at Callsign, and identify the good users, right? Put them into a pile that we know that it's a good user. So that way it makes the bad guys, the reds redder, obviously. And instead of, traditional fraud fighting is looking for that needle in a haystack, right? That's what we're always trying to find the anomalies, trying to find that one-off thing that's going on. We're going to automate things. We're going to put tools in place to be able to do that. But if we can essentially take that needle, right, and put it to the bottom of the pile, remove all the hay that's in there, that's all the noise and all the distraction, all the good customers that we've inconvenienced by stepping them up, challenging them, making them call to a call center, being able to treat our good customers like they are good customers. 99.9% of us are good customers, right? That way, if we're able to positively identify them, know that it's good behavior, but that 0.1%, 0.2%, whatever the fraud rate may be, that if we can leave those behind and make it easier to find them, that's the end of the game, right? That's how we can do that, right? Fraud vectors are going to change every day, but if we can have tools that talk to each other, that understand that it's biometrics, it's looking at the device, it's looking at location, by combining all that together and all the data and being able to remove all that hay, right? That way we're left with as fraud fighters, a little bit of an easier job.
Mm-hmm. I have one point to Keith. I mean, we talked about identifying the bad guys, but also focusing on the, let's say, seamless experience for good guys. And you mentioned, Keith, before that the network which you're operating is providing negative data back to the network. Did you ever think about to provide good data back to the network, or does some organizations actually ask for this?
Yeah. So, and it's an ongoing process for us to determine how, as a network provider, we can feed information and what type of information back to the participants on the network, both on the sending side and the receiving side of the equation, right? That allows them to improve and enhance the capabilities of their fraud engines. And I'll point out that as we are moving to real-time cross-border payments, we have a pilot going on now with Europe, which enables real-time cross-border payments between the U.S. and Europe. That'll be in place. We're doing the pilot this year, probably be general availability early next. We're already talking to our friends north of the border to be a fast follower. So real-time payments to Canada. So that makes the whole fraud, doing fraud really well, or preventing fraud, I should say, really well, all the more important. The doing it well is who we're fighting against, I would guess. So.
I got to say, Keith, thank you, because one of the things as a network, the only way to solve this and identify money muling and such is we actually have to start working together in this new type of fraud. We do this for mortgage fraud. We do it for auto fraud, thanks to organizations like Point Predictive and CoreLogic. We do this with identity theft and with EWS and a bunch of other, we do this with credit cards. When you talk about the Falcons and the SASs and such, we've used consortiums and network information a long time. And so the fact that now the true networks, like yourselves and our processors, are a form of a network. They connect a lot of institutions, the associations, Visa and MasterCard and EWS, all of us. The only way to solve this, on top of the layer of what Hal talked about, which is at the device level and the account level, we also need to look at the network level to solve this. Otherwise, we're really just have no chance of winning. And then it's just whack-a-mole. Versus at the network level, we can actually create some advanced analytics and just start getting very predictive in this. Otherwise, we're really in the detective state. And so I love that you're all thinking about that. And to Ronald's point, it's one thing to share negative information. What we really need to get to is to share in a non-PII way. Just share aggregation information, just length of account and transactions, just high-level metrics, both good and bad, so we can start making risk-based decisions at an account level, similar to what we do on card. But it starts with the networks being willing to provide services. So definitely thank you for leaning in on that. Could I make one other point, Ronald? Is that okay? On the detection side, so we talked a lot about technology and the need to have all the different interconnected technologies. But the other thing that all the fraud fighters, we need to think about is our whole anti-fraud programs have been built on a couple of things. One, fast turnarounds. Think of we moved everything from smile and dial transactions. So first it was just calling everybody to verify transactions, then it was smile and dial to OTP, and now it's automation, everything you can. And then we moved it to low-cost providers. All we've done is taken the interaction with the customer, what I call the treatment, and taken it down to a denominator that we can't scale to support the more complex fraud, where customers are actually being duped and we now need to spend time with them. So we need to rethink our treatment strategies. And that may not involve automation. It may not involve just flashing something and expecting them to get it. It may involve, if you talk to ITRC, Identity Theft Resource Center, it may involve 10, 20-minute phone call conversations with our customers. And so we need to rethink our fraud detection, our fraud operations, our handling, and then we need to rethink how we manage fraud, because on itself, scams will make up, by all estimates, when I look at it, can make up anywhere from 30 to 60% of our total fraud losses if liability shifts. And we're not going to be able to handle that with just simple verification texts. It may work some of the time, but my guess is fraud's got so complicated, we need to be prepared to actually start getting more customer servicey with our customers when it comes to these types of authorized fraud. I think there's a treatment shift that we're going to undergo here over the next several years, where our fraud operation shops are going to be more handholding and more tech support, kind of maybe even some social support, helping them through loneliness and such. It's going to be interesting to see when you start thinking about where this goes. Technology is not going to get us out of this problem.
And if and when that liability shifts, I only see the fraud going up in my mind, because I don't have any liability now, and I'm not even going to think about it. The fact that I'm going to send you $500 for that dog, right? I know I'm covered. So if I get the dog, great. If I don't, no big deal. But my bank's going to cover me. I see an increase versus a decrease if that liability does shift.
If it shifts the wrong way, we absolutely will. There's there's good ways and bad ways for shifting any liability. We've seen this in the past through credit card, through long times working with associations and chargebacks and all kinds. There's good ways to do it, and then ways that'll just create a problem that will actually, mix the authorized fraud into first party fraud, and really just, and it's not about shifting just losses to institutions. It'll actually, I think, it's going to raise the overall sea level or water level of just the amount of scams and abuses we see, that creates kind of almost passivity or negligence, or I don't know what the right word will be, but it'll definitely may have the wrong impact if we do liability shift in a less sensitive way.
Yeah, it could reduce the reasonable individual diligence for transactions that I do, as an example, because, hey, somebody else is covering it, right? Now, I think that's a big risk.
So the good news is, if we have anybody from CFPB or anybody on that's talking to regulators, it's not about should liability shift. It's how, and it's constructing a process, and we can learn a lot from the card associations, a lot of good and bad lessons. I think there really is. We need to be mindful on how we do this, because I do think there is a logical shift that needs to happen, but it's not, it can't be, carte blanche. It can't be everything. It needs to be measured and tested and rolled out methodically.
But Ian, you mentioned a point that we should add again the human touch to look at our customers, looking at transactions. But I would make the statement that the trend is completely in a different way, that a lot of organizations getting forced, or actually from a business, they need to lower costs. Everybody's looking for automation. Everybody is running behind to implement all these new tools and technology and biometrics here, OTP here. And a lot of big companies struggling to really keep up with all the fraud types and really implementing something new, a lot of layers and a lot of technology and different approvals and different budget rounds. Do you think it's really feasible that big organizations or small organizations go back to really implement more human-centric interaction with customers?
From my perspective, I think I'd like to see it that way. I'm going to talk optimistically and say that it needs to be that way. But I agree with you. I think what we're going to do is we're going to find more pressure on the non-authorized, non-scam fraud, where we're going to automate the heck out of card transactions and mobile. We're just going to really squeeze that side, and then hopefully deploy our resources in a more thoughtful way on when there's a human being on the other side of the transaction. That'll be good for not only the scams, but it'll be good for other human crimes also that need to be detected, because there's a human being that is impacted emotionally on the other side. So I think that we're going to evolve and probably hopefully move to more automation on some of the simpler, I hate to say simpler fraud, like ATO and card, and the more complex stuff that's nuanced and messy and just human, like all of us are. I think I really do think for us to be successful, I think that could possibly be a differentiator to banks. At the same time, I think that's the way we're going to likely I'd like to see us evolve. I don't know if we're going to get there, but I think we're going to have to get creative there.
I mean, Ronald, to your point, we have to, as a community, we have to get faster in trying different technologies, putting them in, and I like to use the analogy of, we build a lot of tools and technologies in brick and mortar, and it takes us, months, years to get back into the queue to undo the bricks that we just built, 3 months ago that we solved the problem from 2 years ago, right? That's the fraudsters don't have to go through those hoops. They don't have IT queues, right? They may have budgets, but not, they don't really care about them. They just try different things and they move on. We have to get faster as an organization, as a community, and be able to respond quicker.
Yeah, we have a few minutes left before the hour. So maybe the last chance looking at the questions. If someone really likes to pick up one of the questions which came in, to give a short answer. And if you're done with this one, we're going for a short round of summary that we can wrap it up for this session for today. Ian, do you have any question which you would like to take up and provide your perspective?
I've tried to keep on top of them as we go. I think I've missed the last couple. I think there's a thought here on the last one. Lack of data consistency from banks, data providing about the person, who made the deposit change. So I think one of the things we're going to have an issue with on this, when we talk about data, is both common taxonomies, and this is something that the UK has really advanced. At the Knoble, we've tried to publish a common taxonomy framework for working with under the Fed's model, but also are working with the Fed's model and also IT Group, the research organization IT Navarra, tried to create a model where scams roll up into a broader taxonomy structure or framework for fraud typing. I think we're going to have to adopt something similar across banks, just like the associations the card networks have done very well, helped us. So it may be, Keith, that the different organizations like yours, working with the Fed, working with maybe EWS and some of the others, we create some sort of common framework where we can start sharing information and sharing threats and calling them. So I do think it's an opportunity for us to start making sure that we are speaking the same language across institutions, so we can size the threat. I see there's a question: is the resource you can share? One of the things I would just say, and I hate to plug, the Knoble again, but I will tell you, it's a nonprofit, and we just try to share information. Go to the Knoble. I'll put it in the comments. Knoble.com. Knoble with a K, Knoble, THEKNOBLE.com. Sign up there, and for anybody interested, join the join the Scams Roundtable, and you'll have access to the framework that we put together. And that's a way to kind of accelerate your program there and share with each other. That's been a really good resource, and so I'll put it in the comments also. But that's free to any individual that wants to get access to it. We're just trying, again, we have about 250 organizations that have come together trying to create a common framework around scams. It's not perfect by any means, but as institutions, as solution providers, we have to start aligning somewhere. Otherwise, we're just going to keep missing each other and never get our arms around the real problem.
Thanks, Ian. Thanks for all your initiatives which you're running at the same time. Hall, any kind of final words from your side, any kind of advices to the audience?
Yeah, I think we need to work together, right? We need to be able to adapt technologies quickly and react quickly as a community. And it's going to take everybody, right? We have to be able to look at this holistically. And I think, Ian's organization that he founded is fantastic, right? So everything, when you think about fraud, right? People aren't doing it just because they want to and they want to, ruin someone else's lives by taking over their account. There is money to be had, right? Either for them individually to profit, or that money is going to go into a larger effort that the Knoble is trying to stop. So, 100% support everything that he is doing, and then all the, the group of people that we've gathered and he's gathered to really stop it at the beginning, right, where the money starts and stops.
Thanks, all. Keith, from your side, I mean, you are involved on a daily basis on running a network. Any kind of final advice for the audience which they should watch out?
No, I would just say we all, those of us within the clearinghouse and broader across the industry who we deal with, it's an industry issue, just like Ian was saying and Hal was saying, we've got to work together. It's an industry problem. The only way we stay on top of it and continue to do better with it is with an industry solution. Absolutely.
Perfect. Then I would really like to round this up and say thank you to Keith for joining. Thank you to Hall, and also thank you to Ian for sharing all your perspective. Again, there's no silver bullet. The topic is evolving. We need to identify how to stay ahead or how to keep up and how to be flexible enough to be adaptable. I think that's a lot of challenges for many organizations to really play the game in the right way and learning all the new rules which are coming up. Perfect. Thanks you also to the audience for joining today. Thank you for all the questions. Stay tuned for more topics, and big thank you.
Thanks all.
Thank you, everyone.
Thanks, Ronald.